Hey guys, All in Crypto here, and welcome back, ladies and gentlemen, for another YouTube video. I hope you've all had a terrific Tuesday so far. It's certainly been a very trying Tuesday, given the kind of market action that we're seeing. We're going to be getting into that in this video. This is going to be a Cardano video, and we're going to kick this video off with a clip from Charles Hoskinson's AMA yesterday, where he talks broadly about the kind of overview and what's taking place within the cryptocurrency space, and how what's taking place with Cardano's price right now isn't asymptomatic for Cardano, but more the wider financial landscape. And this is something that we've been reiterating day in, day out now for nearly the past 4 months in our daily cryptocurrency market updates. They are well worth a watch because not only do we dive into the cryptosphere, but we also look at the external world around us as we have become more intertwined with it. Given the nature of our market, Bitcoin is now not really moving necessarily off its own fundamentals, off the halvenings really, which causes the Bitcoin 4-year halvening of the Bitcoin 4-year cycle, but more so the institutional involvement within it, as that's where the big money is. We've all wanted institutions, certainly I have, for a long time to step into crypto. That essentially changes the entire game. So we're going to play the clip. We're going to be talking about it. We're going to be going over a number of things, looking at a number of different charts, looking at Bitcoin, looking at the total money within the crypto space, looking at gold, and I'm going to tell you the reasons why, looking at the 10-year treasury bonds, the 30-year treasury bonds, also looking at the likes of the NASDAQ, the S&P, Facebook, Netflix, Apple, and of course the overall market. So we're going to get into it, guys. Let's play the clip and then let's talk about it.
A lot of things have been going on. The Ukraine situation has profound geopolitical implications, and it scared the international markets. It's very curious to me that cryptocurrencies run counter-cyclic to the. My belief is cryptocurrencies should run counter-cyclic to the stock market and all these other places. But instead, they're running in pair. So as the Dow Jones goes down, as the NASDAQ goes down, as markets fall, and there's fear in the markets, Bitcoin also goes down. Bitcoin's down 15% this week. It tends to drag everything down with it, rising tides and falling tides. It makes no sense at all, because if the world's going to war and we're worried about inflation and chaos and tragedy, you would think that the opposite would be true, that as instability occurs here, that crypto assets are a safe haven. They're a put on world security and trust in institutions, so they should go up. So I think it's a combination of overheated markets last year combined with some institutional pairing and some retail fear together. Unfortunately, what this means is that everything just goes to hell really quickly. Easy up, easy down. People love the ups, but they forget the downs. And predictably, there's been a tsunami wave of criticism coming to Twitter and other channels saying, do something, save us, save us. Like, first, guys, it's a decentralized ecosystem. If it's truly decentralized, no one has the power to save you. The ecosystem is going to save itself. Honey Badger doesn't care. And more importantly, nothing can be done at any event. If today a cryptocurrency announced a partnership with Microsoft or Google and said it's going to be the Windows standard or the Android standard cryptocurrency, you'd see a short-term spike, and within a week, the gains would be gone. They'd evaporate. Macroeconomics and geopolitical fear eat markets for breakfast. That's just the reality. Look at COVID. When it came out in 2020, everything went to hell. It was blood in the streets. And tomorrow is probably going to be a real tough day for the markets. And that's just where it's at. So that's why you have to zoom out.
We'll leave it there, guys. We could play it's well worth watching this AMA. He's got a brilliant way of putting things into context. He dropped some absolute pearls of wisdom within certainly the first 20 minutes of that AMA, where he's talking openly. He's not necessarily answering questions just yet. Talks about how money is, criticism that often is levered against him is the fact that he's a billionaire. Why would he care about the price of Cardano? He's not got a vested interest in it, and all these sort of retail investors do, and it's kind of unfair. But he was saying that really you've kind of missed the concept here, and the concept is that we're all in a queue to our money being worth nothing. He's just further back within that queue. to do with the likes of inflation. He talks about 20% inflation and so on. So he gets it. And the reason that I bring this up is because you need to understand this as investors. People are looking to blame one another. They're looking to blame the likes of myself that talk openly about crypto. We don't get everything right, guys. We get some stuff right, we get some stuff wrong. That's life. Not everybody gets everything 100% right. And we've been far more accurate about the cryptocurrency market at large than we have incorrect. Yes, we thought that 2021 would end in a similar way to 2017 or prior to that 2013. But hindsight is a beautiful thing, and you can really understand the reasons why we didn't end in that kind of a fashion. And right now, and it's why we played that Amazon clip of Jeff Bezos talking about the Amazon stock price going from $106 or $7 all the way down to $4 during the dot-com boom and the crash, of course. And he said the price just was so uncorrelated to the actual asset that it was trying to represent. It was so uncorrelated. The Amazon stock price did not represent Amazon because the stock price was going down towards the floor, and every metrics you can weigh a company up by was going was becoming stronger and stronger, and the company was growing and becoming more and more valuable intrinsically, given its user base, you name it, its utility and so on. Crypto is in a similar situation. Those of you that held throughout, I've often said, one of the curses and blessings that I had within the crypto space, like many people that are here today, was that I got involved in 2017. It's not the first time that I bought Bitcoin, but there's a very interesting story behind that I will tell. I want to do some sort of more open, lengthier podcasts in the future. But it was a baptism of fire, really, in the sense that I, like everybody else, got caught up in the FOMO, thought we were going to the moon, and we didn't. And what that left me down here with was the kind of price equation had kind of gone out the window, and I fell upon the kind of fundamentals of crypto, what's really going on here, and just why it is so valuable and that the price really wasn't representing it. Those of you that held throughout this will know just how much good news there was, and the price didn't really reflect that. But value eventually gets realized as adoption grips the world, as cryptocurrency adoption grips the world, which I believe it's going to. You guys know I think it's a kindred to the internet or akin to the internet, and it's going to follow the same kind of curve of adoption. In fact, going to get adopted in more of a fast manner, and we're at a pivotal point right now with regulatory framework possibly coming in for the US. So this is all really important things for me to talk about. Yes, things didn't play out how we wanted them to, but we're dealing with it accordingly. And when we put out our end of year, end of cycle, and is the cycle over? It's too early to tell, because what happens if Bitcoin, are we in a bear market? Are we in a bull market? Technically, in regards for crypto, we're not in a bear market. Even though we've pulled back as much as we have, still a pullback given the impulsive move that we had. Now, that doesn't mean that this is the bottom, but what I am saying is that, people were calling for a bear market down here. We then went on to make a higher high. What happens if the same thing happens? And it could happen. It is a possibility. Once this structure's based out, we've got rid of a lot of uncertainty within markets across the board. And these people that have taken money off the table, why are they taking money off the table? It's only to redeploy it at a later date at what they deem a cheaper price or a better entry. What are you going to do? Leave your money in cash? Why do you think companies buy Bitcoin and are going to see over the long term this uptick as companies maintain their value, their real value, not fiat value, in regards to what they can purchase throughout the world and their buying power, because Bitcoin will prove itself as a hedge. So it's very interesting. It's an exciting time to be alive in general. But what Charles spoke about is the fact that, we are very tethered to the geopolitical events at the moment. And right now, we all know that Russia kind of advanced into its breakaway Ukrainian or deemed breakaway Ukrainian sects. What's the best? Regions, if you will. And this is seen as an advancement. And markets, of course, are acting accordingly. And we are absolutely tethered very heavily to our tech stocks. And I would argue, look how, we think crypto is volatile. Look at the NASDAQ. That's a big boy sell-off for the NASDAQ. In fact, it's similar to, or not quite similar to, we've seen some pretty horrific sell-offs. What I was going to do there was look at Netflix, which actually saw a worse pullback, but this had a lot to do with their earnings and so on and so forth. But it goes to show people don't want to, they don't want to hold a little bit of a lame horse in this race. This had a worse sell-off than, of course, the March 2020 event. And so did Apple's actually held up relatively well. I don't really own stocks, but, it may be something I venture into the future to kind of diversify. But look at the likes of Facebook, or Meta as it's now called. Huge sell-off, and they're still selling off. So we are correlated, and crypto's actually held up relatively well, to be quite honest with you. It has different fundamentals to these, but it is also that tide, like Charles says, like we say in pretty much every video, just like Bitcoin is the tide that rises and sinks all ships, macroeconomics is the tide that rises and sinks all instruments within it. And you are seeing people, one reason that I personally know as somebody that is heavily into markets across the board, we're going to start, this is the beginning for this channel, guys. We're going to start newsletters, we're going to start publishing media in regards to the cryptocurrency space and finance. We're watching the likes of people run into gold. This is gold, the spot gold price in relation to the US dollar. We're seeing people run to gold. We're also seeing people during this period of uncertainty, whilst the majority of your riskier, more speculative assets are selling off, people run into government bonds. Can you see this? People are running into less or deemed less risky assets. Now, if you understand crypto, I would argue there is a element of it not being as risky as it's deemed to be. And that's because over time, it looks, these volatile periods get smoothed out in the same way that you're, in the kind of curve of adoption, there's ups and downs within that. But over time, it's going one way, the whole Metcalfe's law kind of scenario. So maybe I'm rambling on now, guys. It was just to kind of reiterate a lot of what was said. This is well worth a watch. Link in the description to this AMA. Always worth a watch. Charles is always worth a watch. Very intelligent individual. And he's essentially, what he's saying here is what we've been kind of echoing for a while now in terms to markets being more correlated to one another. And during time periods of uncertainty, so we've got the Federal Reserve, their monetary policy. One reason we expected continuation, by the way, which we not massively spoke about, was because the Federal Reserve actually weren't supposed to start tackling and reducing stimulus until the end of this year. That is the original timeline they set out for it, and then they went, hang on, we're going to start it in March. And markets went, well, hang on, we were expecting another, 10 months of stimulus, or 12 months of stimulus, and things being propped up. But of course, inflation, they have to be seen to do something. And I am, as much as an investor, I like inflation in the sense that, I hedge it. The reality is, and it's a harsh reality, is 40% of Americans don't even have $1,000 in savings. They get screwed. And I'm not for that at my own benefit. So, it's a tightrope that I walk, but ultimately I'm an investor. I think over time, inflation doesn't stop, ladies and gentlemen. And it's not going anywhere. It's built into the credit system that we live in. I read a brilliant book called The Philosopher's Stone. Some of you will know what the Philosopher's Stone is. Traditionally, it's the stone that essentially, or the compound that essentially turns a base metal into gold. In the book was basically about the credit system, and it was saying that is the Philosopher's Stone. You can create, value essentially from the credit system. And if you understand the credit system, you'll understand a lot of what's taking place right now. So there's lots going on in a macroeconomic sense. Hopefully we're teaching you guys about that. It's very, isn't it interesting that there's this whole new generation of individuals getting into crypto, and I don't mean generation by a certain age group, all ages. My viewers go from teenagers to pensioners, and that's something I'm stoked about. But isn't it interesting how you've got this new class of investors that are still very new to the market, and they're now learning about how markets work? And I'm happy to maybe help teach people a little bit about that. So the main message of this video is we're going to have to watch what happens with macroeconomic events, just like the 2020 thing. It didn't reflect what was going on with assets, more the kind of macroeconomic landscape. And this is something that you've got to understand. And what's taking place with Cardano right now will make a lot more sense. Apologies for this being slow. I've got lots of things running on this computer right now, or laptop, I should say. So it's very, very interesting. Cardano really broke this support, but technicals have kind of gone out the window. Just like for Bitcoin on-chain metrics, they were tossed out the window because they were screaming bullish for so long. But if your macro markets don't allow it, if people are in fear, it will kill off markets. So yes, we've broken this support, which is pivotal, which doesn't see us have a lot of support underneath us. But ultimately, these markets could change on a dime. What happens if, this Russia-Ukraine situation turns out to be not what it was originally thought to be, and then things kind of de-escalate from there, And not only that, what happens if Biden then comes out and goes, yeah, we're going to regulate crypto, we're going to tax it, we might tax it a little bit heavily, but we're going to allow people to trade it, and Wall Street get on board. We're back up to the races, ladies and gentlemen. I don't think Bitcoin plays out in a 2-year-long bear market. I've made the argument for that because I don't think that the fundamentals that drove that 4-year cycle theory exist anymore. It's a different market. Yes, there is going to be an element of that taking place when we have that halvening. The 4-year cycle theory, for those people that don't know, is driven upon the halvening for Bitcoin. And historically, that has meant that miners stopped selling because they became less profitable at those prices and waited and let the price inflate. Supply and demand kicked into effect. You had a price inflation. They then sold. At that point, the price was going up, so you get your retail FOMOing into markets, which is how we expected this 2021 to end. It didn't. But do I think it doesn't end? Do I think we don't get to those price predictions that we set out? I think we get there. I just think we're going to take a different, longer route to it. I am definitely rambling on now, guys. I'm going to love and leave you on that note. A couple of takeaways. I would argue that Bitcoin crypto is actually holding up relatively well in comparison with a lot of the stock markets. These are big moves, by the way, for the stock market. I know this kind of COVID 2020 really hit things, but these are huge moves. I'm going to love and leave you. If you've enjoyed the content, like, it's always appreciated. So is a comment, and I look forward to seeing you all in the next YouTube video. Thank you very much for watching, ladies and gentlemen. Enjoy your Tuesday.